Ron Mitchell, the Executive Chair of Global Lithium Resources. The June quarter was an incredibly busy operational quarter for the company. We delivered a number of really important milestones, which will certainly increase the credibility of the project, and I'll be pleased to report on those throughout this presentation. So a quick corporate snapshot. We're sitting close to market cap of close to 70 million. Importantly, very strong cash position of 27 million in the bank as of the end of June. Still a very tight register, 260 million shares on issue. We do have an equity position in another ASX listed company that has tenure to the south of our project, Kairos Minerals. I've got about 2.4 million in equity tied up in that vehicle. And the share register there, you can see we've got a wonderful balance of strategics, including Mineral Resources sitting at 10%. Canmax, one of the largest lithium producers, downstream lithium producers in China, close to 10. Sincerity and a number of other high net worth individuals. And our board, we have made a recent change to our board composition. It's a more streamlined structure now, with myself moving into the exec chair role. And Jiaming Chen, who's a mining engineer by background, coming into the business in an executive director capacity. And that's a really important change in terms of allowing faster decision making at the board level. The company does have a number of really important decisions, both operationally and, of course, corporately to make in the next sort of 6 months. So it's an incredibly exciting time. And we're also supported, of course, with 2 non-exec directors in Hayley Lawrence and Greg Little, and of course, Kevin Hart, a very experienced co-sec. So key highlights across the business through that June quarter. The most significant has been the upgrade to our mineral resource estimate at our Mana project. We've got an increase here of 43% in terms of lithium mineralisation across the deposit. And that's resulted in effectively a 26% increase in the total contained lithium within the deposit. So on an LCE basis, that moves the deposit now up over 1,200 kilotons. Importantly, for our DFS and de-risking our DFS, it's resulted in a 63% increase in the indicated JORC classification. Now that's really important because it's improved our geological understanding of the ore body. And this very important MRE update will now be conveyed into the DFS. And we've got the mining schedule now underway, a rehash of the mining schedule. And that's going to be crucial because we are expecting an extension to the life of mine as a result of this quite significant increase. We do have additional exploration drilling ongoing at Mana that will be concluded shortly, and those results will be coming to market. And that's really the focus of testing some extensions to the southwest of the deposit. And we did receive an EIS grant as well for our Marble Bar tenure, 50% met by government in terms of drilling out a potential gold-silver target as well. So our increase is substantial. As most of our shareholders would know, we're a young company. We only listed in May of 2021. We listed the company with total mineral resource of about 10 million tonnes, totally inferred. And you can see only a handful of years later, we just had our 3rd year anniversary. In fact, we're now sitting with a resource across 2 projects, close to 70 million tonnes at 1%. And Mana, our flagship project now, is a substantial global resource in terms of the contained lithium, 51.6 million tonne resource at 1%. So we're thrilled with the outcome. And this is a real project that, as your shareholders would know, is advancing towards completion of the DFS this half. So our Mana project, importantly, 100% owned. It's an infrastructure-rich location, a Tier 1 mining jurisdiction. Importantly, it's a spodumene dominant ore body. There's a number of ore bodies located in other jurisdictions which are not spodumene dominant. And spodumene concentrate is the preferred raw material for lithium processing into downstream battery metals, battery chemicals. And our DFS, most importantly, is very much on track to be concluded within a matter of months. So incredibly exciting time for the company. And we've got a really strong team executing this project. Importantly, I would like to pay my respects to the Gagara people. They're the traditional owners of the land in which our project is located, about 100 kilometres east of Kalgoorlie. And they've been wonderfully supportive. We've developed a fantastic relationship with the group, and are really closing in on executing a native title mining agreement, which I'll touch on through this presentation. Infrastructure is everything. This slide really just covers some of the wealth of infrastructure that our project has access to. Importantly, an operational rail line running about 8 kilometres south of the project site. The Mana project is now the second largest lithium project in the Kalgoorlie Lithium province. And we've developed some incredible optionality around logistics and delivering this concentrate or a potential spodumene ore concentrate to market. So infrastructure matters, and this project is blessed with a wealth of infrastructure. Just across exploration, we have completed now at the Mana project, which is an outcropping spodumene-bearing pegmatite, more than 100,000 metres of drilling, a combination of extensional and infill drilling, looking at growing the resource, excuse me, and improving the geological understanding of the ore body, most importantly. The resource is confirmed, still open at depth and in multiple directions. So we've still got work to do in terms of growing out this resource, but at 50 plus million tonnes, this is a project that is in a stage where it can be progressed through formal project development, ultimately positioning the project towards an FID in the June quarter next year. A quick summary of the MRE upgrade. You can see here some of the metrics around the increase across the mineral resource, the JORC classification, importantly, and the total lithium mineralised content. And importantly, as I mentioned earlier, this MRE will feed into an updated model, which is driving the DFS, which is still underway. We are testing some extensions to the southwest of the deposit. You can see here the southwest is mainly an undercover region. Most of the outcropping pegmatites at surface are positioned to the northeast. But we've now confirmed a strike length of more than 3.2 kilometres, which is substantial. The campaign this year is smaller. It's a 6,000 metre purely RC campaign, and it's purely driven to test extension of the resource. So we do expect to be back to infill this program and to drill out additional targets in the years ahead as we continue to build on the resource. DFS is nearing completion. This has been an incredible body of work driven by a very solid internal technical team and led by our project director, Tony Chamberlain, but very much on schedule now to have this work concluded this year. So importantly, by the end of this year, we'll be one of only a handful of companies on the planet that has completed a DFS with a mineral reserve and that has a mining lease in hand. And that is going to position our company wonderfully well as we move towards FID with the market rebounding in 2025. We are using the best in the business in terms of assisting us with this work. We have GR Engineering, Res assisting with the CapEx review and the layout review that provide us some wonderful insights into further improving and streamlining the CapEx of the project. And SRK is also performing the independent mining technical review. We do have other key consultants with expertise in drill and blast to ensure that we deliver a really optimised and economic project in the very near future. The other critical part of developing a greenfield project in the mining space is obviously approvals and land access. And this is where we've had some wonderful recent success. So the mining lease is in play. It was submitted to the Department of Energy, Mines and Industry Regulation and Safety last year in April. The layout has been finalised, and importantly, we're expecting the mining lease to go to grant within a matter of weeks of the NTMA being executed. And importantly, the negotiation around the NTMA has been one of bilateral mutual respect, most importantly. We've already engaged a number of the local Gagara businesses to assist us in various work streams in relation to the Mana Lithium project. And we look forward to the very near-term completion of that agreement by way of formal execution. There's also a number of additional miscellaneous licenses which have been completed in relation to the village, the airstrip, and other infrastructure corridors which will support the logistics pathway of the project more broadly. Quick recap also on heritage and environment, other very important work streams to de-risk your project. and ultimately position it towards an FID. A heritage survey is completed throughout the entire mining lease. Importantly, no culturally significant sites have been impacted. And importantly, environmental, we have completed both our spring and autumn surveys throughout the site. Again, no significant species identified, so there's no requirement for an EPA referral. That is very different in other parts of Australia, with complex flora and fauna positions. And our mining proposal and closure plan is well advanced, and we expect to lodge those documents as soon as the mining lease is granted. Works approval for native vegetation clearing permit also are well advanced. So once that mining lease is in hand, we can commence mining activities at the project site. So just summing up the milestones ahead, and importantly here, incredibly de-risked and disciplined. We understand the position of the market. We feel we're one of the few companies that's incredibly well positioned given the amount of work we've done to understand this ore body geologically, to de-risk it through some really extensive metallurgical test campaigns, and we've proven through very advanced metallurgical test work program that we can produce and recover a very significant portion of the lithium mineralisation. So we're looking to produce a concentrate and recoveries of sort of plus 75%. We do have some final ore sorting and met test results we will deliver to market in a matter of months. We do have a concurrent underground mining pre-feasibility study ongoing that will be delivered in parallel with the DFS. And of course, our exploration results with regards to this year's campaign will also be announced this quarter. The mineral reserve is very much underway based on a significant portion of the lithium mineralisation now in the indicated category. Of course, approvals, both environmental, land access, native title, on track now to have those all executed this year. And that will pave the way, as I mentioned earlier, for arguably one of the most critical milestones for the company, and that's the grant of the mining lease. And of course, the DFS. So as you can see here with these milestones, the team is really very busy at the moment. It's a high performance team, and we're really excited about achieving these key milestones between now and the end of the year. And then we'll move through the funding piece, which will support an FID in the June quarter of next year. So that's when our CFO, Matt Allen, will be a very busy man. Just touching on our Marble Bar Lithium project, we do have a second project, 100% owned in the Pilbara jurisdiction. It's an 18 million tonne resource at 1%. We're in good company here. We've got Pilbara Minerals, Pilgangoora, and Mineral Resources Wodgina mines out to the west of us. It's about 160 kilometres south of Port Hedland. We've got more work to do on this asset. We think it's highly prospective for a number of commodities, including lithium and, of course, gold. There's a gold target there that we'll look to test throughout the course of this year as well, to the north of the tenure. But our view is that we'll land bank this particular asset. We think the value of this asset will only appreciate over time, and we're here positioning to provide great value and accretive value to our shareholders in the long term. So just summarising, we're really well positioned. We're multi-asset. We've got a great position in terms of the mineral resource, close to 70 million tonnes across both projects. 70% of our offtake is uncontracted. We've still had an enormous number of inbound inquiries throughout the course of this year, more than 20 counterparties coming through the office, all positioning for offtake. We wholly own our resources, so that gives us excellent optionality around structuring deals. Spodumene dominant ore bodies, high lithium recoveries, these things matter when you're developing a project through formal development. Great jurisdiction to be mined, both within the Pilbara and, of course, the Eastern Goldfields and Kalgoorlie. We do have a blue chip counterparty supporting us on the register. We're well capitalised, 27 million in the bank. Experienced board and management team. And we have a lot of experience globally as well through partnerships. The other role I have is chair of the LME Lithium and Cobalt Committee. I've been in that role for 5 years now. So we are value accretive, we're de-risked and very much growth focused. And as I've mentioned a number of times, the company's in a fantastic position as we continue to de-risk this project, deliver a fantastic outcome by way of our DFS this year, and ultimately take this project through funding and into construction next year. So thank you. Happy to take any questions you may have.
Great, thank you, Ron. Appreciate that presentation. Great to see the progress that the company has made this year, and also what's coming up in terms of future milestones for the company towards the DFS. We have received a few questions, which I'll start on shortly. Before we do start on those, just a quick reminder to everybody, if you'd like to ask a question directly to the company, please enter that into the Q&A panel within Zoom. Okay, on to the first question, and this one is on the MRE at Mana, which was recently upgraded, of course. So, Ron, what is Global Lithium's exploration strategy at Mana just to deliver further growth there to that MRE, which is now above 50 million tonnes?
Yeah, well, look, at 50 million tonnes, this is a world-class resource. There are very few projects of this scale globally. So there's more to come. Just bear in mind, this resource has been defined now on about 100,000 metres of drilling, and the majority of that drilling over the course of the last 12 months has been infill drilling. So it's really improving the geological confidence of the ore body. So I think there's more to come by way of the resource. As I mentioned during the presentation, it's still open along strike in multiple directions and at depth. You will see an underground mining component to this project, we feel. Certainly, we've got some wonderful grades and quite thick extensions at depth. And what we do believe, however, is that we have a project of scale that supports a standalone processing plant development at the site. Of course, we have optionality to look at other potential strategic options. But what we'll look to do is preserve cash by way of future exploration. But as we progress this project through and we receive funding for construction, we then will look to further extend the resource by way of additional extension of drilling going forward.
Great, thanks for that answer, Ron. You did just mention preserving cash, and one of the next questions is around the company's funding at the minute. Just under 27 million was in the latest quarterly, 26.9. How long will this balance last the company, and will a capital raise or financing be required in the near term?
I'll take that one. Thanks, Ben.
Thanks, Ben.
Morning, everyone. Yeah, look, as you say, Ben, balance sheet's in good condition. We've been very deliberate in managing our burn rate through this year. We're well funded to complete all of the activities to deliver the DFS that we've just been talking through. And that includes a fairly substantial hydro drilling program that we need to execute as part of securing water for both construction and operational purposes. So that's probably one of the lesser mentioned drilling programs in addition to our mineral exploration program. So the balance sheet's in very strong position right now. We're well funded through a substantial part of calendar year 25. Our burn rate is now below $1 million a month. So we don't anticipate being in the market having to capital raise prior to completing the DFS and moving through the funding cycle on the Mana development.
Okay, Matt, and while we've got you on the questions, the next one's around the capital management. In fact, so the company's worked hard on its capital management this year. What is the outlook in this regard, and will the company continue to curtail spending where possible in the current market conditions?
Yeah, look, it's a key question about where is lithium prices are heading, and I can see a few questions coming through about lithium markets, which I'm sure Ron can comment on. Our objective here is to have the Mana lithium project shovel ready by the end of this year, and that means finishing all the activities on the exploration program, the DFS, the hydro program, the permitting and approvals, and have ourselves ready to move into construction. We've already completed a lot of the high spend activities in 2023. This included a very big drilling program last year. We did over 60,000 metres of RC and diamond drilling last year, and all of the expensive metallurgical testing activities that you've seen the results on. So they've already been completed, and that's how we've been able to keep our burn rate now down to a very low level. We're always mindful of monitoring the market conditions, and we do respond. We are a nimble team, and we respond appropriately if required. And that means continuing to manage our burn rate and and the things we commit to doing until we actually need them. So if there will be things that we'll push out till post FID that we'd love to be doing now, but we'll just delay those until we reach the FID milestone.
Great, thanks, Matt. The next question is around the DFS. Are there any uncertainties to accomplishing or completing the DFS without measured resources?
No, absolutely not. We don't believe so. As I said, we are moving now towards having them in reserve, which we'll announce in parallel to the DFS. So the amount of drilling we've done is really significant, particularly around the infill drilling, and with the core focus there to improve our geological understanding of the ore body. So absolutely not. We think with the indicator position we have going forward, our resource model is incredibly robust, and that will absolutely underpin our DFS going forward and stack up to an independent technical expert review as well as part of our funding strategy for next year.
Thank you. The next question, you mentioned underground mining, the potential for that at Mana earlier on. So how did underground mining arise as another option? Can you explain the background of that?
Yeah, no, very simple. It's all around cost. So we'll be mining. We'll have an open pit. The initial structure of this ore body will be open pittable. As I said, it's an outcropping spodumene bearing pegmatite. So it'll be an open pit operation for the first period of its mine life, and then on the back end of the mine life, as that pit moves down to depth of probably close to 300 meters, where we have some very significant pegmatites at that depth and very high grade. We'll be at a depth where we can run an underground portal to access these very high grade pegmatite dikes. So we think you're going to see more underground mining optionality for lithium projects across the West Australian sector. So that's how it's come about. It's really driven on strip ratio and cost and delivering ultimately the most economic project. We do expect to infill next year as part of moving the underground PFS into a DFS level, but we would have made all of our money in the first 5 years of this project in terms of the open pit operation. So the DFS, so that the underground component is really the cherry on the top as far as the financials go.
Sure. Okay. And the next question is exploration related as well. Does Global Lithium have an exploration target for the Mana project?
We do. Unlike other companies, we won't put targets out there. I think that's can be a little bit misleading, but certainly internally the company is really confident. We've got a project that's going to continue to scale over time. Like any project and any exploration drilling program, you do need time to drill out your resource. Ultimately, to be able to drill out a resource, you need anywhere between 3 and 5 years, and we've just completed year 2 of our drilling, so more time. But as I said earlier as well, a 51 million tonne resource puts you in quite rare company globally in terms of having a standalone operation that is amenable to having its own process plant. So that's the line we're taking, and we've got very strong partners to support us, and of course, very strong interest from the downstream in our project. You will note with the pullback in the market over the course of the last sort of 8 to 12 months, there's been a significant slowdown in exploration activities from some of our peers, significant wind back in terms of formal progression of study work such as DFSs and also metallurgical test programs, because all of these things cost millions of dollars to execute. So what we're finding is we're getting a significant separation on the next wave of potential discoveries. Discovering a resource is one thing, taking it through to formal development is something entirely different. And that is where we're very uniquely positioned.
Okay, thank you, Ron. The next question we have received, do you intend to buy out the royalty on the Mana project?
Look, the royalty is only outside the project area. So there is no royalty within the project area, so no requirement to. But clearly, if we make a material discovery outside the existing mining lease, the existing project area, then that's something we potentially look at.
Great, thanks for that one. This looks like a question for probably you, Matt. Is the company still receiving interest from offtake or financing partners despite the downturn in the lithium sector?
Look, that's yeah, absolutely. Ron mentioned that a little bit earlier, Ben. Yeah, we've been continuing in the last 6 months to take numerous inbound queries, both from an offtake, partnering, and a funding position. Clearly, the market has moved since 2023 with the froth that was in the market on the back of some fairly strong commodity prices. But the partners we're engaged with and we're looking to work with and partner long term with are clearly some of the top tier players that bring capability to us as a company. You know, funding is one element, but the ability to integrate into the value chain is really important. And yeah, Ron alluded to our uncommitted offtake. We have 70% of our offtake uncommitted. That is our key commercial leverage at the moment, and we intend to leverage that offtake commitment to the fullest value as we move to FID the project. And there still remains a lot of inbound queries. We've taken delegates from South Korea, Japan, India, China, Europe, North America. I think we had our boardroom full with about 20 odd companies from China just 2 weeks ago. That shows that the demand for spodumene as a feedstock is still very strong, and we intend to work with those partners over a very long period of time towards some mutual outcomes with our project and beyond.
Yeah, if I can add something there. Look, I think for me personally, I've been in the sector 14 years, so this is the third cycle I've been through, and whilst it's brutal at the moment and equities have been hammered, we think the upside is certainly there. These type of energy transitions don't come around too often, and they are challenging to navigate. It's a global story, and energy transition is very much a global story. So I will say though that whilst prices have come off from those very high levels in November of 2022, they're still about 3 times higher than what I experienced on the last downturn back in 2018-19. So everything in context, and I think I've got a band-aid for a reason. I've been in the trenches, and I've been through this cycle a number of times, and I absolutely know what's ahead. And the thing again that gives me personally and the company the greatest confidence is the tremendous interest we're receiving from the strategics and that downstream group on a global basis. So the market is ahead of us. The best days of the market are ahead of us. This is a challenging year, no question, but it's not a time to be jumping in shadows too. We've got a very clear, concise strategy. We've got a great project, a great team, and we're here to execute.
Great, thanks, Ron. The next question we have received: what is the expiry date of the current exploration lease at Mana? I imagine that is, and when will the mining lease be granted in your estimation?
Yeah, first part of that question, not sure. I'm not across the detail there, but we have, like all mining tenements, you have a minimum expenditure you need to meet on an annual basis. We are very clear. We use Devlin Tenant Management to support us in that effort. We have a full-time land access and approvals manager that manages our tenure and ensures we're compliant in all facets. But in terms of the mining lease being granted, yeah, absolutely. We're very confident, absolutely confident we'll have it granted this year. We've got a very close relationship with Demers, and we're in contact with them very often. As I said, the mining lease being granted is contingent on us executing the NTMA, and we're very, very close in terms of having that document executed. So, as I said earlier, hopefully a matter of months.
Great, thank you for that one, Ron. And a question on just Marble Bar. You did touch on Marble Bar as well, Ron. But when does Global Lithium expect to resume exploration at Marble Bar?
Yeah, we did get that EIS grant, so we've got a campaign scheduled. Question is timing. Our team is heavily focused on Mana at the minute, so that is our core focus, both technically and commercially, of course. But there's definitely, Matt and I just finalised the budget for next year. There's definitely a component to look at that particular asset and look to drill and explore it further. It is a very significant land holding, as I previously mentioned, and we just need time. But I don't want to distract the team. Our focus is Mana. our focus is lithium, and then we'll turn our attention to Marble Bar next year, and that is probably a good time to reassess the Marble Bar opportunity, because we expect the market will rebound next year, and going into 2026, we think that'll be a good time to start exploring again and creating value for the shareholders.
Thanks, Ron. We have time for one more question, and it looks like it's going to be one of your favourites, Ron. So what is the outlook for a rebound in the global lithium sector, and are there any signs that it might be emerging? Anything else to add there?
Geez, Ben, if I had $1 for every time I've been asked this question over the last couple of months, I'd be a very wealthy man. Hey, look, we're expecting a lot of the supply that's coming out of some of the jurisdictions, such as Africa, and obviously lepidolite, which is I think lepidolite in China is a long-term strategic resource. It's not something that's going to be exploited in any meaningful capacity in the next sort of 5 to 6 years, in my view. That's really a strategic resource that if the market does get critically short, that China has an option to supply lithium units into their value chain. Look, what we're seeing, and I don't necessarily think some of the supply out of these other jurisdictions is necessarily sustainable in the long term. That's the big challenge. Whilst prices are high, yes, every project on the planet makes money. It's just a question of how large your margin is. Again, the green shoots that I'm seeing is with current pricing, we are seeing pullback in terms of supply. There's still some inventory in the system that's taking a while to work through. But certainly there'll be no greenfield project development at current spot pricing. And I'm still a firm believer of the incentive pricing that's been promoted by most of the investment bankers and brokers globally. So yeah, that's what gives me confidence, is ultimately it's a commercial economical decision in terms of which projects can go forward in the current market environment. And then there will be sustainability issues longer term that will need to be considered. So. But again, the thing that I mentioned a number of times gives me the most confidence is that engagement with strategics on the downstream. They're actually quite concerned with this pullback we've seen. I talked earlier about a number of companies down in tools completely. That concerns them because they're not interested in the spot price now. They're not interested in lithium supply now, as in 2024. What they are interested in is sourcing very significant amounts of lithium to support their ambitions in that 2027, 2028, 2029 timeframe. And that's when our project is going to be in market. So, yeah, I'm confident. As I said, it is tough at the moment. And clearly, I'd love to see the equity commodity price higher, but we're doing everything we can, everything within our control, to ensure that we are one of the best positioned companies on the planet when that rebound comes.
Great, thanks, Ron. And what a brilliant way to sign off there on the macro environment and where global lithium fits into that situation. We have no time for further questions, but if you do have anything else you would like to ask Ron, Matt, or even myself, please send through those questions and we will endeavour to answer them as soon as possible. Before we finish up today, any closing remarks from Ron or Matt?
Yeah, just obviously been a difficult year. I just want to reiterate the fact that the management team here and the board, we are 100% committed to getting a great outcome for our shareholders and all those new investors that we're in conversations with. So we are very confident. But thanks for your support, your ongoing support, and look forward to delivering value to you going forward.
Great, thanks, Ron, and thank you for joining us today for this webinar. There will be a copy of the webinar circulated later today or tomorrow. Thank you very much. Enjoy your day.
Thank you. Bye-bye.